Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is Tuesday, so we're expecting some form of volatility to be joining the markets today. I remember yesterday was a public holiday in the US. It was also a bank holiday while they were celebrating the Juneteenth. So Juneteenth is a holiday where they celebrate the freedom of Black Americans. This is when the first law was passed or the first order was given to make sure that every Black person within the US was no longer a slave. So it was a public holiday, so we saw little to no activity happening in the markets. So if you are very busy yesterday trying to squeeze in a position, then you probably noted that nothing much was happening. And it was as a result of the US having that holiday. So remember, the US is the most liquid market in the world. So if they are majorly not participating, then we don't see surprise moves. So if you look at the S&P 500 and how it behaved yesterday, then you can see from the relative size of the candlesticks on the 1 hour chart, it was pretty much a very cool market. So this is the S&P 500 yesterday, today, early this morning. So the only activity we are actually seeing is the last 1 hour. So same case applies here. So very quiet market yesterday. In the Dow Jones index, only activity seems to be the last 1 hour. And of course, if you look at the NASDAQ, nothing much was happening yesterday, even today. So the last 1 hour, some slight form of volatility, but I don't think it's much. So we might have to wait and see later to see if something actually happens in this chart. So that being said, there's nothing much happening in the economic calendar today. So right from yesterday having this holiday, then we didn't have any surprising news. So today, early in the morning at 4:30 a.m., we had monetary policy meeting minutes coming from the Reserve Bank of Australia. And it shows that the decision to make a surprise rate hike of 25 basis points, which moved Australian interest rates to 4%, basically was a balanced vote. So after the release of the meeting minutes, we basically saw the market making a big spike. And this is basically the Australian dollar losing to the US dollar. So after the announcement of the news, if you look at the Audi USD currency pair, there was a very big spike downwards. So you can see the big spike happening early in the morning. But then since then, we haven't had much activity in the Audi USD pair. So the only notable thing is that we had this trend line happening on the 1 hour chart. And immediately after the release of the news, there was a big drop, basically implying that the trend line has now been broken. And we could be seeing this price action continue to happen, where the Australian dollar now continues to lose against the US dollar. So as for the dollar index, it was a slight momentum upwards. So nothing much was happening. However, from the last 1 hour price action, there was a big drop in the dollar index, and it has caused some momentum in other currencies. So for instance, if you look at the pound USD, a big spike higher. If you look at Euro USD, also a big spike higher. USD CAD, it was a slightly small but big drop towards the lower side. But then if you look at the USD JPY, here we have seen some volatility since morning, spike up, down, quite confusing. Basically implies indecision in such a market. But the most important chart I want us to focus on is the chart of gold. So as you can see, gold was trading in this consolidation within the 15 minutes chart. So kept just going from Friday, then yesterday on Monday, and then today we kept playing within those two trend lines. Before we saw the break, a retest and a continuation, which basically implies that we could be seeing some much higher prices for gold, especially considering the weaker dollar. So there is a good chance that this swing could extend all the way up to the base of the pattern. So this is around 1966 price level, having hit our area target of 1964. So after consolidation of 2 days, it's a good chance that we'll be seeing continuation here. So we just have to be patient, observe the price action, and hopefully we'll get to achieve this target. So as I proceed, I should all know that if you have any questions regarding the presentation, feel free to type those questions and I'll be responding to them right away. These sessions are always educational never financial advice, nor a recommendation to trade. So always do your due diligence and practice proper risk management at all times. So hello, Philip. Hello, Michael. Hello, Macau, Patrick, and John. Thank you, guys. Thank you for joining the session. Remember to like and share the video with other people. So that being said, let's look at a brief summary of what happened in this morning. So nothing much. The Australian dollar declined after the Reserve Bank of Australia June meeting minutes revealed that the decision to hike interest rates was finally balanced. So besides this, we have a couple of data points coming up. So we have seen a very surprising data point coming from German producer price index. So I'll be sharing that too. So here is the economic calendar. So German PPI month over month. So this is basically a measure of forward prices. So in the previous reading, they had an increase of 0.3%, but now we are seeing a very sharp drop of negative 1.4%. So what this means is prices are actually dropping. Remember, we were focused on prices slowing down, but now what we are seeing is prices dropping, which basically implies that we are almost winning in this battle against inflation. So for Germany, I think this chart of producer prices is very telling. The prices were on the rise last year, and then they dropped through October, November last year. And then this year, we are seeing them dropping from the previous reading of 0.2 down to negative 1.5. It basically implies that prices are cooling off, and this means that the German economy is winning in this fight against inflation. So it's a leading indicator. So the overall effect might be felt in the next reading of German CPI. So we'll continue observing and monitoring the data to see if actually inflation cools off. And once we see evidence of this, then we know that the ECB may now stop hiking interest rates. However, from the previous reading last week from the European Central Bank, they were pretty insistent that even on the next meeting, they are looking forward to continue hiking interest rates to address the current high inflation problem in the Eurozone. So we'll be having a current account for the Eurozone at 11 a.m. I think this has already been released. Building permits for the US at 3:30, and of course, housing starts at the same time, 3:30. CB leading index for Australia at 5:30 p.m. GDT price index for New Zealand. This will be tentative. And then a speech from FOMC member Williams at 6:45 p.m. So these are low impact news. So we don't expect the markets to be moving a lot after the announcement of this news. So the major news item will be expected on Wednesday in the morning at 9 a.m. when we focus on the consumer price index for the UK, where inflation is expected to have slowed down to 8.4% from the previous reading of 8.7%. So from there, we'll get a sequence of news, including Canadian retail sales, a speech from Fed Chair Jerome Powell, and of course, all the big news will be happening on Thursday when we see two central banks announcing interest rate decisions. That is the Swiss National Bank as well as the Bank of England. So a lot of activity is way ahead of us for the week. So besides this, on the other side, we had US Secretary of State Blinken visiting China yesterday. He met the Chinese President Xi Jinping. And of course, after the meeting, they had an address. So one of the key highlights is that they mentioned that the US does not support the independence of Taiwan. So Taiwan is a pretty important country in the global economy, mainly because they produce about 70% of the semiconductors. And of course, we know that in the tech industry, which is basically running the world, it heavily depends on semiconductors. So if one country is dominating 70% of the market share, then it only means that that country is pretty important. So they want to maintain peace in that little country to make sure that the flow of semiconductors continues to happen. And of course, there's the issue of the Taiwan Strait. That's the ocean between Taiwan and China. So that particular path manages to handle about 50% of our world container flight. So whenever you hear news about Taiwan, and that meeting was very important to make sure that there was an agreement between the two countries that they are not going to accelerate the tension between US, China, and Taiwan to make sure that the operations continue as expected. So besides this, I don't think we have any major news happening in the markets. So quick perusal. There's also the issue of China cutting interest rates. So far, among the major economies, China is the only country that is currently cutting interest rates. So they recently cut interest rates by 10 basis points, and this is to stimulate the economy. So we all know how this works. If an economy is cutting interest rates, it's looking to make credit affordable and to make sure that there is more money within the pockets of their citizenry. So we find that companies get money at cheaper rates. People tend to borrow more, or they are incentivized to borrow more. And once they borrow, then the overall spending within the economy, aggregate demand goes up, and of course, production tends to go up. So this is not only happening as a result of the slowdown in China. So we have seen the recovery path, especially after they removed the COVID-19 policies. First of all, accelerating the first couple of months of the year, January, February, March. And then in the last 3 months, we have seen the progress really slowing down. Manufacturing data showing some weakness, factory output showing weakness, and of course, the deal breaker was services. So once we started seeing services slowing down, then the People's Bank of China considered adding more stimulus and cutting interest rates to make sure that they maintain the same pace of recovery. So in this case, we expect to see some further quantitative easing happening within China, and this is expected to spur the Chinese economy in the right direction. So with this happening, we're also seeing oil markets responding quite positively. So despite having a very bearish chart on oil prices, we have seen some good recovery happening in the last 2 weeks. So from the bottom that we saw here of $71 per barrel, and this was back on the 12th of this month, within 8 days, we have seen the market make some good run. So this progression upwards, and every time the market pulls back, we are seeing this momentum upwards. So yesterday in the evening, oil prices pulled back downwards. But then from what we are seeing here in the last 3 hours is some form of good resilience here as the market attempts to get up towards the upper trend line. So the target remains the same as yesterday, $77.54 per barrel. And this is for Brent oil. So there is a good chance the market will be testing this particular resistance today. So remember, the overall price action is still sideways. So since, I would say, since the 1st of May, so the entire month of May and June, oil prices have just been moving sideways. And currently we are on a swing from the lower trend line back upwards towards the upper trend line. So we're expecting to complete this journey. And the journey will be completed once we get to $77.5 per barrel. So besides that, USD against the Chinese yuan. So following the quantitative easing, which basically means more money flowing within the Chinese economy, then the currency is expected to weaken against other currencies. So in this case, against the US dollar, the Chinese yuan continues losing. And now we are well on course to test last week's high of 7.19. So in this case, price could continue moving higher. And today we could be testing 7.19. This is a Chinese yuan per dollar. So just checking to see if there is any questions from you guys. So I think the gold price is going to sell. That's quite a thoughtful one. So based on what we are seeing happening with gold, it was a consolidation. So if you're a price action trader, then you know here there's nothing to think about, but then it's not a guarantee. So what I am saying here is that following this price action pattern and what we are seeing with the dollar index being really weak today, then there's a good chance that gold will continue to rally and get to our target around this area here. So this doesn't mean that this is a guarantee that gold will get to this price, but then based on the analysis, there's a higher probability that this could happen compared to the price going back downwards. So how or what is a trading journal for? So trading journal is a record of your trades. So you want to record a couple of things. One, the reason why you are entering a trade, the conditions that have been met in the market to justify for you to make a market entry. Two, you want to take a screenshot. Images speak better than words. So you want to take a screenshot of that chart before you make a market entry. And of course, how you manage your trade. So you need to record what happens during the trade. And of course, take a screenshot after exit or before exit. So once you exit your trade with a profit or with a loss, take another screenshot. And of course, after a period of time, you need to analyze that to make sure that you're following the rules. So the trading journal is there to help you follow your own rules. And of course, for review purposes and assessment, after a period of time, let's say at the weekend, you want to go through your records, see what you did well, what you did wrong. And the only way you do that is if you recorded the entire process. So I hope I've answered your question. Please share the currency pairs in forex. There are just so many. I have done this on the novice to pro series. So just go to YouTube, find the novice to pro series. I think on the first episode, I get to go through each and every currency pair, describing the asset classes and how they work. What are the correlated currency pairs in forex? I've also answered that on the novice to pro. So NASDAQ 100 is the last question I'm answering today. So the NASDAQ has been the most aggressive index or stock market index among the top three. So clearly, it has been extremely bullish. You can see the record here. So the last time the price of the NASDAQ was trading here, it was back on April last year. So in April, the highest price that we saw between March and April last year was right here. And it's a price that we are currently testing. It was also the highest price in February last year. And currently the NASDAQ is testing that area here. So you can expect that there's a lot of profit taking happening here. So sometimes when the market gets to a resistance, you see a small pullback. Sometimes it doesn't happen entirely. So in this case, you can notice when the market got to this high here, it retested for a while and then continued moving higher. Got to this high again, pulled back, and then continued moving higher. And now we have had 2 consecutive days where the NASDAQ has been selling. So there is a good chance that that resistance is holding, but I don't know if it will continue holding for longer. So the idea is if the Fed continues tightening policy, then that is going to be quite positive for the dollar, but negative for equities. So we don't know whether the Fed will go for another rate hike in July, but then we also know the information that the Fed is following, and this is pretty much public. So we know that the Fed is following the CPI data, that is the inflation data. It's following the job data. It's following the PCE price index data, retail sales data, manufacturing data, GDP data, and so on. So the economy or the traders and investors in the market right now are following those data points to try and understand the direction that the Fed will take beforehand. So if the data points are suggesting a very strong and resilient US economy, then you can almost be guaranteed that the Fed will go for a rate hike, and in that case, weaken the NASDAQ. So as for now, we keep following up the data and react to that. So for now, what we are seeing here is a consolidation. Nothing much happening in this chart since yesterday. So for the US, if you go to the economic calendar and then filter, let me show you this. So you can go to the economic calendar here, filter, go for none here, select the US dollar, then apply the filter. So this way you just get to see all the news coming from the US. And one of them will be tomorrow, where the Fed chair will be testifying to the semi-annual monetary policy report before the House Financial Services Committee in Washington, D.C. And of course, he'll be doing the same for the Senate the following day. So Fed chair testifies, in this case, before the Senate Banking Committee in Washington, D.C. So we also be looking at the housing, building permits here, housing starts. I don't think that may have as much volatility. There will be a speech from other members like Cook, Jefferson, Goolsbee, Waller, and Bauman happening within the same week. Existing home sales, and then CB leading index, crude oil inventories, and most important for the week will be flash manufacturing as well as services PMI. So if manufacturing and services remain pretty strong, then we know that the Fed will go for a rate hike. And of course, we'll be considering a cocktail of more data before being very confident about it. So as per now, I feel like the NASDAQ is completely overbought, and that doesn't mean sell. It only means that there's a very strong bullish control. So if there's more data suggesting a very strong US economy, then in that case, we might bet on the NASDAQ continuing to push to newer highs. However, if there's weak economic data, then in this case, the Fed will have achieved its goal. And in that case, we'll be looking at a much weaker NASDAQ. So that's the reasoning behind it. So for now, I don't have a price projection. I would say just wait for the data and then observe what happens after that. So that's it for the day. Thank you very much, guys. And I hope to see you on the next session. So yes, comment here, I don't see NASDAQ. So the NASDAQ 100 index is labeled UT100. So it's sometimes described as the US Tech 100 index, basically referred to the NASDAQ 100 index. So thank you guys, see you on the next one. Can I start trading Forex with $20? Yes, absolutely.